So everything I highlighted there looked pretty good and positive. So why did the stock price fall following that earnings announcement? And it was primarily due to the guidance the management team gave and a hiccup in terms of construction and supply of some of its computing power. CoreWeave updated as a result of that delay. CoreWeave updated its 2025 guidance, now expecting revenue in the range of 5.1 billion and adjusted operating income around 700 million. And the company anticipates ending 2025 with over 850 megawatts of active power. So following the stock price fall, the stock CoreWeave on a forward price to operating cash flow basis is trading at a price to OCF of 9.24, which I think is relatively cheap given this company's growth prospects, but also understandable given the risk profile of this company and the large capital expenditures required to generate that revenue. I just shared with you, they said they're going to more than double their CapEx next year. Furthermore, when I look at valuation based on my intrinsic value calculation, CoreWeave is trading at a market price of $89.90 after falling 15% today. And the intrinsic value per share I calculated is $108. So even after applying a margin of safety, CoreWeave stock looks cheap on both the forward price to OCF ratio and the intrinsic value basis. Now, this wasn't the case the last time I evaluated the company on October 22nd, where I told investors and informed investors that the valuation was too expensive for me to rate this business as a buy. But if you were interested in buying this stock and you were waiting for a dip, waiting for an opportunity, I think this is that opportunity. I think the price decline following this earnings release and the subsequent increase in the backlog and revenue and expectations for growth in the next coming years, I think makes this an interesting investment. Now, I would only recommend this for those investors that have a high risk tolerance. This is a high risk, high reward type investment. This is the type of investment that could increasingly significantly add to your wealth in a short amount of time. But it's also one of those investments that can crash by 30, 40, 60%, and nobody would be surprised. So make sure your ability to tolerate risk is above average, well above average, in order to jump into this investment.
Click the link below to watch the full video.